Ladies and gentlemen, welcome. In this video I would like to demonstrate to you first with the respective concepts and then with real-life examples how you can use the market causality also in a defensive situation. So over the last 5 years or so I've shown you live trades, first on the Forex Reality channel and then later on this channel. I've demonstrated my own approach to the market causality with a very high win-loss ratio, clearly above 90%. And I would like to show you in which cases you have to react. Basically, if things switch and go wrong and you have to do something about it. And remember, no matter how you approach the market, what's your personal trading style, whether you use stops or whether you have a more complex position sizing system or you use emergency hedges or etc. I mean, in the end it comes down to the reality that in the best case you have a good win-loss ratio where most entries or trades are profitable, even if you use multiple entries. You have a kind of balanced average win-loss, risk return. That means like the average loser is not too high compared to the average winner, and you have those two factors together with a reasonable trade frequency. If you manage to achieve that, guess what? You have a profitable trading style. Now, in this video I would like to show you how things can change once you're in a trade and why you should, in those particular scenarios, if the bias is clear, just close the trade. So let's start with the first example. So here we have a price, we have some shorties, therefore the smart money pushes the price up against them with some pullbacks. Also here, look at the net money indicator. We have an ongoing squeeze, yeah? So the red line is above the middle line. So the smart money algos are squeezing out all those dumb money shorties, taking the stops, giving the margin calls, etc. Now let's say this has been going on for some time. This has been going on, so now the price has taken the recent highs, maybe a high on the long-term chart. So you decide to actually place a post stop hunt trade. Okay, so your idea is to short back into the range. So some big stops have been taken, the market is overstretched, you want to go short and take some pips off the market. And I've shown many times how this can be done and how that works well. But it can happen that, you know, out of like 10 trades, you have, let's say, 2 cases where either the move is not deep enough, let's say, or you missed the exit, yeah. And now the following happens. You are short, and then suddenly we have shorties coming into the market again. So you're trying to trade a post stop hunt exhaustion move, but then shorties come in the market. These shorties are not just small, and remember, we're in a situation where you have an ongoing squeeze. So if those shorties keep on pouring into the market, they can clearly lead to an increase in the net damage shorties. If that happens, it can be a complete trend resumption and a very long move against you. So what I'm saying is, if you entered the trade and if you miss the exit for whatever reason, or the move is just not as deep in terms of pips as you expected, And then you realize that again shorties pour into the market and the squeeze will continue. Do not try to hold it over. Get out. A squeeze can go on for days and weeks, can be 600-700 pips or more. You can't afford to be short when the price can go wherever. So you need to do something. Okay? So you may have traded it a lot. You see, well, I can take some nice profits here. But if this dumb money, even though the price already took out many shorties, again goes on the short side, don't fight it. Okay? And in fact, let me show you a real life example where this could have happened. Let me show you. This is cable. Okay, that's pretty much the scenario I was describing. So let's say for whatever reason, wait. Okay, there we go. So this is, for example, a nice real life screenshot. Look, so let's say the price took the highs, took the plateaus, took the stops. Now you want to trade short post-stop on exhaustion move. Yeah? Let's say that for some reason you missed the exit. And then look what happens. In this particular scenario, once more shorties come into the market. Here you go. You see? Those shorties in a squeeze scenario. So we have an ongoing down money squeeze. The red line is above the middle line. Shorties come in. So look, this big move happened after. You don't want to be caught in that particular move. Get out. Take your loss. Okay? In this particular scenario, you may even be able to get out at break even. But even if not, take a loss. Right? Because you don't want to be in a situation where the price does this here and you're short. Boom. And there's a massive stop run. Remember, if you take a loss here, look, the down money switch followed thereafter, and there may be a tradable setup later on, okay, or the next day. There are always opportunities. But what I'm saying is, don't insist on each single trade. You see, down money switch, exhaustion move. Long as continue coming into the market, so you got two shorts here. So don't cry over spilled milk, as I say. Why is this so important? Let me explain that. And many traders, they don't realize that. They're too focused. Look, trading is not really a binary game. Sometimes you can have multiple entries and you can close the basket overall in profit. But the problem is this. If you are short here, and here the causality switches, and the price goes completely against you. Like in this case, we're talking about 400 pips or whatever. So if you just hold your short and you're down 400 pips, proportionally this is way too big of a loss. Even if you take off 30 pips or 40, 50 pips off the market, let's say, yeah, 40 plus 50, 90 pips is lower than those 400 pips. You understand? So people don't realize that when it's clear that a trade position goes against you, if the causality clearly shows you what's going on, don't insist on the trade. Okay? Get out quickly, reassess. Look, if you just here take a loss even of 25 pips, look, with the next trade you already are in net profit again by getting 30, and then you get a profit one with 40 pips. You end up with a nice number plus, without having those pain neither overnight, etc. You understand? Okay. So that's one scenario. So the next scenario I wanted to show you is this one. Now let's say it's the other way around. So there is a squeeze going on, shorties are coming into the market. Now let's say you try to trade one of those failed reversals. Okay? So you say, look, it's an ongoing squeeze, shorties still have appetite, I want to buy this one because I think there will be a failed pullback. Sorry, a failed reversal and another pullback up, the high will be cleaned. And I want to trade long. Yes, it works a lot of times. But let's say in this particular scenario you were not lucky and you entered long, and then suddenly, shortly after maybe you entered long, longies get into the market. So a dumb money switch happens. Look, the beauty is that the causality shows you live what's going on, so you just need to react, you understand? Now, the market is already overstretched. You have a dumb money switch going on from shorties to longies. You either didn't manage to get out on your current trade or you entered too late or whatever the reason is. And therefore dumb move falls. So it's this time a real dumb money switch, and the market in the response really does a reversal. Again, the same. Don't just hold it over, because what happens if the market goes into a squeeze, right? And more long is coming to the market. Okay. And this is already overstretched and leads to a complete reversal down. There's a pullback, but then there's a reverse gray pattern, etc. Again, do not just hold this. Once you see that for whatever reason there is a dumb money switch and you are caught on the wrong side, and this was not a failed reversal, but instead was a dumb money switch, and even maybe leads into a squeeze, to a dumb money squeeze. This time the longies are squeezed. Don't hold it over. Again, this can go anywhere. Hundreds and hundreds of pips. You understand? So this particular example I can demonstrate with this chart from Australian dollar. Okay, so let's say the market went up against the longies. For whatever reason, you got a really bad entry here, because you were confident that, you know, the price will go up again, and then suddenly there's a real dumb money switch. You see? So longies enter the market. You see? The shorty squeeze completely collapses. Look at that. Squeeze is over. If you tried to trade a failed reversal and you thought, come on, the shorties are not finished yet, and you get caught clearly in dumb money switch, get out. Okay? Don't try to hold it over. It can go, again, completely down. There's no point. You understand? So I showed you a failed post-stop hunt move, and I showed you a failed pullback trade, which was based on a failed reversal of the shorties. Alright? So the third one I'm showing you is this one. which would be a failed dumb money switch trade. Nice. So let's say, well, actually, since the example is this here. So let's say we have a price, the price comes down. Okay, and you think that because you have maybe some longies in the market here, and suddenly you have some shorties. So you think, come on, the price came down so much, we have a little dumb money switch, so I want to buy the market. And now the price, rather than doing the expected reversal up, it's maybe a pullback. But then what happens? Boom. Again, longies come in. So the dumb money switch move doesn't take place. Instead, you yourself are caught in a failed reversal move. Alright, that's the other scenario. If that happens, in particular, again, if you even have a long squeeze going on, you need to get out. Okay? Because the squeeze can go, again, hundreds and hundreds of pips. You don't want to be long. Now, it's a different story if there's no squeeze. Because maybe those shorties are early ones and they announce a dumb money switch that's going to happen. You just were a bit too early. In that particular case, you may be able to place a second long and to do a basket trade. You understand? And then you may be able to close both your trades and profit at basket. You understand? But if there's a long squeeze against the dumb money long is going on, you can't, go for a second one. Get out. Because you sometimes, you catch a nice dumb money switch move. But if for whatever reason you either miss the exit or there is a dumb money switch to the other side again, accept it. It doesn't happen very often. That's a funny thing. Like, what I'm showing you here is rather rare, but it happens. You can't assume that every single trade is a winner. So if the causality tells you, look, the market is switching again, you're placed wrongly, do something. So in order to demonstrate you this particular one, let me show you the euro-dollar chart from today. Okay. Yeah, this is a good example. Let's say the price comes down, longies, and let's say that for whatever reason you wanted to do an early risky trade and you saw a little bit of shorties maybe coming in here. Let's say, okay, and you said, you know what, I'm going to do early entry long. I mean, this trade doesn't look very smart, obviously, when you look at the screenshot. But let's say for whatever reason, you placed a long trade. Now what happens? Look. Not only do longies come into the market, which are much more dominating than those few shorties, so they're gonna create the failed reversal down. But look, this even results in a dumb money squeeze. You understand? If you were caught in a squeeze, get out. Simple as that. Okay. Because again, this price can go hundreds and hundreds of pips down. If this wouldn't be in a squeeze, oh, I beg your pardon. Wait, I need to show you here. Okay, you see? So let's say you entered long because you thought, a dumb money switch is coming, but long is coming again, and this whole move even results in a squeeze. See here, the net dumb money line going above the middle line. You need to get out. Because guess what? The squeeze can go on and on and on. And exactly what happened here. Longest came in. Okay? If you are, however, in a situation, let's just assume for a second that the same situation happens, but look, the squeeze already collapsed. Boom. Okay, let's say the line would be here. You see some shorties coming in and you go long. Because you say, look, it's an early dumb money switch trade. Look, if you see that the market is not in a squeeze mode, you may be early, but look, even if the price goes against you, if again shorties come in, boom. As I showed before, you may be able to place a second trade. And then close those two together in a profit as a basket. You understand? So to summarize, I've shown you 3 different scenarios where, for whatever reasons, you ended up on the wrong side of the market. And as I've shown you in a differentiated way, you need to react. There is no, I really tell you, do not try to hold over squeezes. That's the biggest mistake you can make as a causality trader. And especially if you look at markets recently, where, dollar yen, pound yen, they went like 600-700 pips in one direction with only little pullbacks, driven by dumb money short activity. Don't hold against it. This will give you days and weeks of pain. You understand? Except if you got caught on the wrong side, and this doesn't happen very often if you're very selective. That's the cool thing about the causality, firstly, and secondly, it's amazing that you can see it. So I demonstrated to you here how you can use the causality in a defensive manner as well. Not only to find trade entries, but to find exits also where okay, you know what, I do something now in order to prevent bigger damage and pain in the future. That alone is amazing. So if you try to trade a post-stop hunt exhaustion move, but you see a squeeze continues, get out. If you tried to trade a fade reversal, but you get caught up in a dumb money switch, get out. Okay, and some people, they will trade several fade reversals up, collect profit, and then if they were a bit more risk taking and they took a late entry, get out. Don't give back all your profits earned before. If you try to trade a dumb money switch scenario and you get caught in a squeeze, get out. But if you try to trade a dumb money switch scenario and there's at least no squeeze and the dumb money has a big of a battle going on in between longies and shorties, you may hold it for now and see whether you get a second entry. But obviously all those decisions require proper position size management. Okay. The amazing part is that the causality allows you to trade all market conditions. Doesn't matter what conditions, whether we have a trend or consolidation or whatever. Okay. You need to adjust to the respective scenario. For example, if news are coming up and bigger moves are possible. But even if you want to just use stops and say, you know what, I want to protect myself in whatever scenario, which is recommended. Look, the causality shows you where you can place your stops. That's maybe the last point I should explain. Okay. So let's say you wanna sell this market against the longies, yes? So you wanna go short. And you wonder, where should I place my own stop? Well, guess what? If on the y-axis there's a longy nest here, okay, so this is your live stream access, and you see a screenshot. Okay, and then you have maybe some empty stops here, which is often the case, by the way. You often see those kind of constellations. Alright, so obviously what do? If you want to set your own stop, you for example put it here. Why? Because those longies are a natural resistance, an actual resistance, not the fake resistance. So if the price goes against you for whatever reason, look, once it reaches this longy nest, it may kiss it, but then most of the time obviously they don't want to let the longies win. So even if they take out those two stops here of the dumb money longies, of the dumb money shorties, so these are empties of the dumb money shorties. So let's say, like often it's a case there are some shorties here, and they're already in loss, and these are their stops. You understand? So these are the medium-term stops of the dumb money shorties, which are, look, remember, those shorties are already here in drawdown, and then they get finished off. Most of the time, if they took those stops, the targets, then lasso principle, remember, they may mess around and then quickly go down again to catch the dumb money longy positions, and they may even do what you originally thought they would do. So if you want to work with stops yourself, obviously place your own stops at those reasonable levels. So above the closest stop nest of the dumb money shorties, if you're short, and above the closest dumb money longy position nest. Give it a bit of room as well, because I like to overshoot, undershoot. Like here, for example, if it's another 10 pips in addition to those. Don't put it very close in, but just overshoot a bit and you get kicked out. You understand? Now, let me just emphasize, if you do that, which is absolutely fine, understand that when you want to work with stops yourself, and you say, look, whatever, if the price goes here, I'm out, and that's how I calculate also my lot size, be aware that in order to make your, let's say, system profitable overall, your risk return needs to be balanced as well, not only the win-loss. So that's another mistake many people do. So if the price comes in your favor and you just close it here and you take 8 pips, but then you let it run against you 80 pips, yeah, you don't have any balance in the system. This will still be a losing system. You may have 8 winning trades and collect 8 times 8 pips, or 10 times 8 pips, 80 pips profit, and then it goes one time against you, and 80 pip is your stop loss, so everything's gone away. You understand? Be aware that when you want to work with stops yourself, you need to. It's a necessity, it's not a luxury. You need to find situations where you catch a bigger move in this in equivalent size or more. So let's say you had a good entry. The price is coming. Okay. More longies come to the market. You know, okay, nice. I'm on the right side. Longies keep on buying. And now I can write my trade. especially if this scenario here results in a squeeze and you manage to get into a squeeze, then write the whole squeeze. Once the price came sufficiently direction, you may be able to even protect your trade, you see, and to pull your stop closely below your entry price. So now understand, if you do that though, very often the price will just do a pullback and kick you out. If you do that too much and you can't bear the price moving around, you may end up in the problem I've just described with an unbalanced system. You take only a few pips profit and you take big losses. You understand? So be mindful with that. Now obviously, if you're short and suddenly you see that the whole market switches and big shorties come in, maybe here, look, we have new shorties coming into the market with old shorties below, and as a result we have the money switch. So longies get out and shorties get in. Right. Get out. If the causality is switching, and there's no point trying to hold over for no reason, right? Now, as a last comment, you will often see that, for example, the price approaches counter nests, like here, the old shorties. Okay, let's say that no new shorties came in, but we have the old shorties. These can be good targets to take profit because you know that there will be pullbacks. But just because there are little nests on the other side, counter nests, and they just are priced in with normal pullbacks, doesn't mean that you necessarily should close the trade. They may just do a normal pullback and then go completely down. Because guess what? Especially in a squeeze scenario, there's no money tolerance for those shorties. They just get priced in one time, maybe, or two times, and then the move continues. You understand? So just because there's a counter nest on the opposite side doesn't mean you necessarily should close. So yeah, these are quite some important topics. Alright? So be aware of that. But it's fascinating how you can use the market causality not only for finding entries, but also for managing a trade and finding exits. And as I've shown in this video, if you're suddenly in a situation where you're caught in a dumb money switch, etc., react. Don't just wait. Because in the worst case, you get caught in a squeeze on the other side, and the smart money takes you hundreds of pips in the wrong direction. You don't want it. You understand? So that solves a massive problem many traders have. If you have a more elaborate approach with, let's say, stops, and maybe you vary your lot size depending on the quality of the setup, which is a good idea, to say, look, here everything is aligned, the planets are aligned, everything is good. I have the price didn't move that much yet. I have old longies, new longies. I have nice stops below as targets, maybe, of the down money longies. So it's easy for me to see that, the market will go down and I will risk. There's not much in the way. Go for it. If, of course, that's the case, but there's a little shorty nest in the way, you may to reduce your lot size, right? Okay. It was a pleasure to show you those more elaborate points. They are important. So understand that you need to take this into account. But as you know, I've shown you many trade examples, live trades. I've done several videos per trade for half a decade now, where, like I've traded all these setups in front of your eyes. And all of those trades basically worked out. There were some where the price went a bit more in the other direction. So those I count as failed trades. For example, remember like a year ago or so, there was a situation where I tried to trade a dumb money switch, and the price went further than the other, so it was like a failed dumb money switch trade, and that I count as a failed trade. Now, many times you did a correct analysis and you did a good trade, and the price goes a bit against you, for example, and then you can reassess, and often the dumb money goes once more on the side you want it to be, and the trade gets even more valid, and you may even be able to increase, but that's a topic for another video, the scaling. Stay safe, everyone.